Starting 1st April, your salary slip will look different. The new Income Tax Act 2025 is now in effect, and alongside new labor codes, it changes your take-home pay, your perks, and your retirement savings. Under the new wage rules, at least 50% of your salary must be basic pay. Earlier, companies kept basic at 25 to 40% to reduce PF and gratuity. Since most companies contribute 12% of basic to PF, a higher basic means higher deductions. So in the short term, your in-hand salary may dip, but in the long term, your retirement corpus grows. Now also what's changing are how your salary components are treated. Several exemptions have been increased, especially under the old tax regime. Children's education allowance jumps from 100 rupees to 3,000 rupees per month per child. Hostel allowance rises from 300 rupees to 9,000 rupees per month per child. Meal benefits go tax-free up to 200 rupees per meal, up from 50 rupees. And gift vouchers exemption increases to 15,000 rupees annually. Bengaluru, Hyderabad, Pune and Ahmedabad are now treated as metros and qualify for a 50% HRA exemption, up from 40%. They join Delhi, Mumbai, Chennai and Kolkata. But there is a caveat. The compliance becomes tighter. You must clearly state the landlord-tenant relationship. If annual rent exceeds 1 lakh rupees, a rent agreement and PAN are mandatory. Non-compliance means TDS gets deducted and you cannot claim HRA. Some perks will now increase your tax burden. Tax on company cars used for both work and personal purposes has increased. Vehicles with engines up to 1.6 litres will attract a tax of 8,000 rupees per month. Bigger vehicles will attract 10,000 rupees per month. Add a chauffeur and that's another 3,000 rupees per month. This applies under both the regimes. Also, low interest or interest-free employer loans are now taxable, calculated against SBI's lending rate. However, loans under 2 lakh rupees and loans for medical emergencies remain tax-free. For market participants, securities transaction tax is going up. STT on futures rises from 0.02% to 0.05%. On options, it goes from 0.1% to 0.15%. Also, buybacks will now be taxed as capital gains. And TCS, which is tax collected at source, has been changed. Overseas tour packages cut to 2%, education and medical remittances down to 2%, and alcohol TCS has been increased to 2%. And lastly, one important change. Companies must now clear all dues within 2 working days of an employee's last working day, whether they resigned, were retrenched, or dismissed. Earlier, this could take 30 to 90 days, but that's now a legal violation. So what is the final picture? More exemptions, better compliance, and higher retirement savings, but also higher deductions and in some cases, higher taxes. Follow for more stories.